be here to explain why the trade war is hurting his business so much. Power Lunch starts right now.
And welcome to Power Lunch. I'm Melissa Lee. All three of the major averages wrapping up the week on a high note. The S&P and the NASDAQ both higher here. Check out Facebook shares. They are under pressure as a number of state attorneys general get ready to open an antitrust investigation into the tech giant. We'll have much more on this move later on. Kelly.
Melissa, thanks. Fed Chair Jay Powell speaking moments ago in Switzerland. This will be the last time we hear from him or any other Fed official before the next Fed decision. The market's almost guaranteeing a quarter-point cut. Did Powell give any hints either way? Steve Leisman is here. What do you think, Steve?
We're going to let you and viewers at home be the judge. He was in Switzerland, asked directly by a member of the audience whether he would be cutting rates in the months ahead. You tell me what this tells us.
We're watching all of these developments, the geopolitical risks. We mentioned Brexit. There are others, the events in Hong Kong. Watching those carefully, watching incoming data, and really looking at financial conditions broadly. And we're going to be assessing those as we go into our next meeting and future meetings. And what we've said is that we're going to act as appropriate to sustain the expansion.
So that act as appropriate has kind of been the code word for we're going to cut rates, given that the market thinks we're going to cut rates. Now, Powell's comments came after the jobs report, which he said showed a healthy jobs market and underscored a relatively upbeat view of the economy from the chairman. Let's take a look at the jobs report. I've divided this up into the good stuff and the bad stuff, and it's kind of equal in a lot of ways. Rising wages, growing labor force participation, temporary help on the upside, and a really strong household survey for several months now, not just a single month. Over on the right side, we got the bad stuff. The headline payrolls missed expectations by 20, downward revisions of 20,000, and really under 100,000. A lot of the growth was from census workers, so really modest private sector. So Powell was asked about the possibility of recession.
Our main expectation is not at all that there'll be a recession. I did mention, though, that there are these risks, and we're monitoring them very carefully, and we're conducting policy in a way that will address them. But no, I wouldn't see the recession as the most likely outcome for the United States or for the world economy, for that matter.
And I suppose I'm not going to get off the hook of answering Kelly's question. I don't think he changed or wanted to change or said anything that would change market expectations for a 25 basis point cut. He was asked about the disparity, which was a good question from the audience about this. Rosengren saying we shouldn't cut, Bullard saying we should cut 50. And he said, hey, it's kind of murky. It's kind of murky what we should do, and it's not entirely clear. And he kind of welcomed the differences of opinion on the Fed board. So I think we're on track for this quarter point cut. Where the debate is, it's what happens in October, November, and December. And then I think the data is going to have to break one way or the other towards the weakness. We started the week with weakness. We ended with strength. The manufacturing decline in the ISM manufacturing. Services were strong, and payrolls were, I think, on balance, pretty good to okay.
And I came back from vacation. I kicked it all off, right?
What does that mean?
Are you
turned it around?
That's why.
I turned it around.
I thought you were questioning why you came back.
No.
You said and I came back from vacation for this.
That's a more legitimate.
I could go away and come back when we have an answer to the question.
Yeah, anyhow. Steve, thanks.
Pleasure.
Stocks erasing nearly all of August losses following the August jobs report. Major averages now looking to finish a second straight week in positive territory. So could higher highs be ahead? This is not a cannabis segment. Could Tim Courtney, Chief Investment Officer with Essential Wealth Advisors, is here. So is Fast Money trader Steve Grasso, Director of Institutional Sales with Stuart Frankel. Also with us is CNBC Senior Analyst Ron Insana, Senior Advisor to Schroeder. Now that the titles and the introductions have been made, we can actually get down to business. Yes. Ron, let me turn to you. Earlier this week, in fact, I think it was yesterday, Hugh Johnson, who has been in a more dour camp lately than some other analysts, said that the one thing he would be waiting to see that might be the thing that would persuade him that the bull market was about to end was an outburst of exuberance, of enthusiasm, of all clear. Is this potentially that moment?
No, I don't think
see
so.
that at all?
No, I mean, I don't know anybody who's exuberant or has an all-clear signal on. We're still trading broadly in a range since January of 2018 till today. Market
but
hasn't
the
definitively
pessimism of
broke out.
August has vanished in 9 days.
But that's different than exuberance, right? I mean, you remember that retail participation at other market tops, and I don't know where the market is right now with respect to that kind of behavior, but certainly this isn't like 2007 when it comes to real estate. It's not like 2000 when it comes to internet stocks. It's not that kind of enthusiasm. I would say I'm actually, after Steve's report, more confused. Jay Powell says no recession. You have other Fed members saying murky. There's almost no reason to cut rates if you don't have recession in your forecast. And so that makes me more confused about where the Fed is rather than less confused.
Why do you need to have recession in your forecast in order to cut rates? I mean, isn't part of rate cutting to prevent recession being in your forecast?
Yeah, I understand going for the soft landing and trying to prevent the headwinds that are overseas from becoming contagion effects here. But if he's definitive about no recession, which he sounded like he was, then it makes me question why he's thinking about a rate cut.
Let me turn to you, Steve. You say, but for now, keep buying equities. So you see no storm clouds to speak of, other perhaps than faltering trade talks, the talks that are on the agenda and either don't happen or talks that happen and do not result in something that the media characterizes as firm progress.
I think this last leg of the rally has been driven by short covering, and that is signaled by all the underperforming sectors that we've seen run. We've seen retail run. We've seen chemicals run. We've seen things run that were out of favor for the last month. Also, look at the technicals, Ty. 29.82 is our last in the S&P cash. We have not been above the 50-day moving average for the whole month of August. We popped above that. There might be a time, there will be a time, I should say, to sell this market. You cannot sell the market ahead of the Fed, and you cannot sell the market ahead of the trade talks in October. That's what's kept the shorts at bay for now. It's a bull run.
Tim Courtney, wrap it all up for us. What do you think?
Yeah, I'd say for the most part, I agree. You know, the returns that we've gotten so far in 2019, we probably have booked most of the gains that we're going to book. But really, the returns we've gotten so far is really just undoing the decline we saw in the fourth quarter of last year, which was forecasting a recession. We haven't gotten a recession. So I think we've probably booked most of the gains, but there's still some to come, especially if the trade talks resume more quickly rather than maybe what the market fears, which is pushing it off into next year.
You are expecting a quarter point interest rate cut, even though you don't think the economy warrants it?
Yeah, I'm expecting it. I don't think it's probably going to help very much at this level. Cutting a quarter point, I think is going to do minimal help to the economy. I would fear that, if we do cut, it does send a message to the market that, the Fed is afraid of something, and that might cause some issues, I think, down the road, longer term, rather than having kind of the short-term pop in the market.
Ron, I assume that you believe that the volatility that we've experienced over the last month, which has been pretty extreme. I mean, they've been, relatively speaking, compared with what we had been having, is likely to continue. What stands out to me is how headline vulnerable and headline-driven investing is right now.
Yeah, I mean, you saw what happened as soon as China and the U.S. said that the trade talks are back on, and you get this big pop. And when they said they were off several weeks ago,
and Xi is the enemy of America, and
so is Jay Powell, and I mean, I'm sure by the end of the day we're going to see a Sharpie over the employment numbers. It says 1.3 million jobs created, but the volatility, the headline volatility is fairly significant. But Tyler, you know how I feel about volatility. It's more the norm than the exception. It's periods of reduced volatility that are actually fairly unusual. And so in that respect, it doesn't surprise me. Now, we are seeing more 2% and 3% days than we've seen in a while, and that's often indicative of either, breakdown or breakout. The question is, do we get the ingredients for a breakout?
Final thought to you, Steve. Is volatility that Ron just precisely described, is that an opportunity for traders or something that, and at the same time, something that investors should play past?
So investors have to play past that. You have to keep your eye on the ball. It's long-term trading horizons, but traders should love the volatility. We've rallied 5% off the August lows to where we're at right now. But it's pretty interesting if you look at the level in the S&P cash. $29.79 is the last retracement from that high that we had to the low that we had in August before we get back to new highs.
Yeah. All right,
Watch
Steve.
that level. It's 29.82 last in the S&P cash tie. Everyone watching this program, all investors, you got to hold that level because new highs are coming sooner rather than later. Be a buyer if we hold that level.
29.82. Thanks, Steve. Appreciate it. Tim Courtney, Ron and Sana. Thank you. Have a great weekend, guys.
Thank you. Thanks.
We have got a news alert on Purdue Pharma. Meg Terrell is here with the latest. Meg.
Guys, this news is coming fast and furious here in the opioid litigation. So news just now that Purdue is in talks with the Department of Justice to potentially settle criminal and civil probes into its actions around marketing opioids. And it seems like from this report, monitoring opioid prescriptions by doctors, monitoring the general use of these drugs, but also apparently the government, according to this report, has considered charges under continuing criminal enterprise statutes, which it says are typically used to prosecute drug dealers. Now, this is evidence of the third sort of rung of the litigation that's going on for these companies. Now, we know that Purdue, according to NBC News and others, has offered $10 to $12 billion to settle with cities and states. Now, that didn't include the Department of Justice. And so it shows that these companies have more to think about than just the municipalities in the thousands of cases that they're facing there. They also have the DOJ. And so what could happen here, according to Dow Jones, is that any money that they reach in a settlement with the DOJ could dilute what goes to the cities and states. And already the states are saying 10 to 12 billion or whatever you're offering isn't enough to settle these claims against you.
Why do they think it would dilute that amount of money instead of it just being, hey, this is what the states are asking for and this is what would happen with the DOJ?
Probably because the Sackler family, which owns Purdue, and Purdue say 10 to 12 billion is all we got and all we can offer you. And what I'm hearing from people close to the negotiations is that the 10 to 12 billion is the valuation that the company is putting on the settlement offer in terms of the value of drugs, the value of sale of the company, and things like that. And people on the plaintiff side don't necessarily believe it's going to be worth that much.
The DOJ, though, is not going after Sackler family money itself, unlike the states and municipalities.
It doesn't appear that way from this report. Yeah. And some people might be kind of surprised by that. Because, in 2007, the DOJ reached a deal, or at least did get some executives from Purdue to plead guilty. But we've heard that DOJ has been upset that that didn't do it. Obviously, according to them, the bad behavior continued.
All right, Meg, thank you. Meg Terrell.
Coming up, we're going to talk about how WeWork is reportedly cutting the size of its planned IPO in half. Could scrapping it altogether be the next step, or has it already gone too far down the road? We'll debate that. And we're going to talk to a bicycle manufacturer who makes his bikes in China like so many of them do and is now facing huge tariffs. The real impact of the trade war on American business, coming up on Power Lunch.
At Tesco, we can pop our pasta in your Astra, our red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try Click and Collect. Just go to Tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try Click and Collect at Tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
No. No. No.
What are you doing?
I don't like any of our preset radio stations. we need a new car.
With the Jaguar E-Pace at $299 a month on personal contract hire, you'll find a reason.
That's better. And it's a Jaguar.
Initial rental £3,588. 48-month term. Subject to status. 8,000 miles per annum. Excess mileage and return conditions apply. No ownership option. Ends 30th of September. Participating retailers only. Jaguar contract hire.
Whoa! Shell saltwater supercars. They look fun.
Science-fueled fun, actually, Dad. Toy cars that run on salt water.
Fuel the family fun with Shell Saltwater Supercars. Fill up with £30 or more and you'll qualify to buy a car from just $3.99.
I want one.
Okay, Dad.
Fill up on fun with Saltwater Supercars at Shell. Participating sites, conditions apply. See shell.co.uk/saltwater supercars for details.
See you, man.
Congrats again.
Welcome back. New fears bubbling up for WeWork after sources tell CNBC the shared workspace unicorn slashed the size of its planned IPO in half. And CNBC.com's Alex Sherman reporting that the company is speaking to shareholders about scrapping the IPO altogether, and that may be its best option. Joining us now is Axios business editor Dan Primack and CNBC's own Leslie Picker. Leslie, let's start off with you. What are you hearing?
So, first of all, it's important to note this deal is incredibly fluid at this point, more so than most IPOs that I've covered in the last 7 years. There really aren't set plans. There are tentative plans. There was a tentative plan to start the roadshow this week. Obviously, that hasn't happened. There are also tentative plans to start it next week. I'm told not really before Tuesday would the roadshow start, but again, it could be next week. It could be the week after. It could be pushed out further into 2019 or even 2020 at this stage. Or, as Alex alluded, they could, of course, still pull the deal altogether. But in speaking with investors who are kind of looking at this thing, people are very concerned about that $20 billion valuation. No one I've spoken to really wants to invest at $20 billion, and they say that people that they're talking to are a little concerned about that level as well. So even though it's been cut in half from the level that SoftBank invested at 47, people are still a little nervous. And a popular trade that people are banting about is this idea of going long the SoftBank bonds, because that's a bet on the real estate assets that they have, which apparently people are very bullish about, the actual underlying assets, but then going short the actual equity as a way to protect themselves against some of the the risks involving, conflicts of interest, management risks, and some of the other things that we're seeing.
That's an interesting trade, but that's, I imagine, Leslie, a trade that can't be put on immediately.
Nope, need the IPO to go forward,
right, exactly.
And you need stock to borrow to short it, exactly.
Right, so it would take a while. Dan, if I were a potential investor in WeWork, if I was looking at this as a potential buy, I think, even if I didn't know what was happening today, the latest headlines about potentially scrapping the IPO, I would think this thing is an absolute mess, and that this is a reflection on at least management.
Yeah, look, management is going to be key on this. And the folks I talked to, including folks who are kind of on the WeWork side of this, not WeWork per se, but folks who are kind of allies of the company, what they say is that when they've spoken to investors, and leaving outside the exact price of where the shares will come out, in general, investors understand the long-term vision of this company and actually don't think it's a bad long-term bet as a company just in terms of what the business model is. Their real concern is Adam Neumann, the CEO. And I wrote this morning. If this thing goes forward and the roadshow starts next week or the week after, everything is on him. His performance will determine this.
So let me just delve a little deeper there, Dan, if I might. There is nothing in the untidiness, let's call it, of this process that suggests that the company itself is unhealthy. There may be questions about the competence of the management, but the company, its business model, seems to all appearances sound.
I think it is. Look, obviously, it is a company that is losing an enormous amount of money. And kind of like Lyft and Uber did, I'd say the difference between Lyft and Uber and WeWork is that WeWork, when it puts a bunch of money into a facility, it then gets to make money off of that year after year after year. Whereas Uber and Lyft, they don't own the cars, they don't even rent the cars. Those are kind of transient. When it comes to the management, I don't think it's necessarily so much the competence of it. I think there's concerns about the governance and kind of potential checks and balances on the governance. Because in this case, Adam, who is a controversial person, if you meet him or hear him speak, he's got a lot of idiosyncrasies. Those are sincere, but he's a different sort of guy. And I think there are some concerns. He has such control over this thing, and no one can take it away.
Being asset light is a positive, but it's also a negative, Leslie. And in WeWork's case, being so asset heavy, they are assets that the company can bank on, can borrow against, et cetera. But at the same time, when things turn south in the economy, and that's what a lot of people think, at least the softening in the economy, I would think as a business, the thing that you cut off the first is your shortest term obligation, and that would be a WeWork space.
Right. That is the fundamental concern with this company, and this idea that it's never really seen a recession in its entire history. It's never been tested under those scenarios. And so people are concerned not just about, corporate governance, concerned about management, concerned about some of the conflicts of interest and some of the bigger headline risks involved with this company, but also just on a fundamental basis, what does this actually look like if things turn, even slightly south for the economy, turn slightly south for the business model? Will they be, in a position where, they could get in trouble? And some of the large asset managers, if that happens and they show up as having purchased this IPO because those positions are disclosed, then, they have to appeal to their management committees and explain exactly why they're taking this risky bet at a valuation that a lot of people are turning their nose up at. If it does go forward at $20 billion, which it's, of course, that's still up in the air as well.
Yeah, it'll be fascinating to see if they go through at the roadshow, guys. Thank you, Dan Permack, Leslie Picker.
And coming up on Power Lunch, the federal government tightens the screws on Facebook on several fronts today. What you should do with this stock while all these investigations play out. That is next on Power Lunch. Stay with us.
Yeah, I consulted with your grandmother's doctor.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
With Rapid Insurance on Vodafone Business, we'll get a replacement phone to you within 4 hours. So if you should... Oh, no. Or even... Just get in touch and we'll...
Your replacement phone, sir?
Your phone replaced within 4 hours with our Rapid Insurance. Available on our new and limited data plans. The future is exciting. Ready? Vodafone Business.
Max download upload speeds apply to data. Coverage may vary. Unlimited and rapid terms at vodafone.co.uk/terms.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
No. No. No.
What are you doing?
I don't like any of our preset radio stations. Ugh, we need a new car.
With the Jaguar E-Pace at $299 a month on personal contract hire, you'll find a reason.
That's better. And it's a Jaguar.
Initial rental £3,588. 48-month term. Subject to status. 8,000 miles per annum. Excess mileage and return conditions apply. No ownership option. Ends 30th of September. Participating retailers only. Jaguar contract hire.
You've picked a good spot for it. Shall we crack out the food?
You open the hamper, darling, and I'll just tell you a little about this yellowtail Pinot Grigio.
A little? That wine will be getting warm in the sun.
Experience how the fresh passion fruit and apple flavours with a zesty palate combine to create an intense yet youthful Aussie white...
Sorry, it's the ants. Yeah, the ants were heading towards the sandwiches.
Yeah.
It's a Pinot Grigio. It's fresh and zesty, and it tastes great. Enough said.
Yellowtail. Cut to the taste.
Welcome back to Power Lunch. I'm Mike Santoli at the New York Stock Exchange. Facebook facing a fresh wave of scrutiny. The stock sliding today after the New York State Attorney General launched an antitrust investigation into the social network. The company already facing an FTC probe. So what could all this mean for the company's shares? Let's bring in your Trading Nation team, Craig Johnson of Piper Jaffray and Gina Sanchez of Trintico Global. Craig, interesting. The stock is backing off today, but really not all that dramatically. It's a good deal off the highs from about 13 months ago, but has been making progress lately. Where does that leave it for you?
You know, Mike, when you look at the chart here and you have all these headlines and all this news, we're still friendly toward the shares from the perspective that when you look at this chart, we're still making a series of higher highs and higher lows. coming off the December lows, and we're moving right up toward that 50-day moving average at 191. From our perspective, any sort of move above that 191 level sets the stock up to move back toward 204, 205 range, which I do think is a logical place to go. So we would continue to be a buyer here of Facebook shares.
Gina, anything in this new round of news, another potential antitrust action here, give you pause about the business model itself? Because all along the way, not too much has dissuaded advertisers from participating in the Facebook platform.
No, it hasn't. But if you look at Facebook, even despite all of this news, is still trading at a premium in terms of forward PE relative to the industry. And so I don't know that it's necessarily pricing in the risk that some of these probes present to Facebook. And I think these probes don't go away. If anything, I think that risk continues to grow. And Facebook has already published a white paper internally that basically shows that it's going to be a real challenge for them to sort of already meet the requirements set down by the FTC to both protect data privacy, but also set by the EU in order to make the data interoperable with other social networks, which would basically kill them from a competitive perspective. So I think that there's a lot of headwinds for Facebook, and I think these regulatory probes don't go away. And at the end of the day, we continue to grapple with whether or not companies like this should even be run for profit, or are they simply just a commodity and a utility that really isn't going to make growth kinds of returns.
Yeah, well, certainly that's not priced in to the stock, whatever scenarios might be. We'll see how it goes from here, guys. Thank you very much, Craig and Gina. For more Trading Nation, head to our website or follow us on Twitter at Trading Nation. Melissa, back over to you.
Mike, thank you. Ahead on Power Lunch, tariff fallout. One CEO speaking out against the trade war, saying his company is fronting the bill for the president's tariffs. Plus, the Department of Justice launching an antitrust investigation to 4 top automakers. We'll bring you all the details. And place your bets. New Jersey could overtake Nevada as the sports betting capital of the U.S. Will this football season provide an even bigger boost? All this when Power Lunch returns.
And now, the latest from TradingNation.CNBC.com and a word from our sponsor.
In determining your entry points with rising stocks, look to buy pullbacks at support levels, such as uptrend lines, prior lows, Fibonacci retracement levels, or moving averages. I'm Lee Bohl, and Schwab is the better place for traders.
I'm getting strawberry notes and a flutter of sweetness without adding sugar. Clever. It is. Yazoo Kids uses a lactose-reduced milk that enhances flavour without adding sugar or artificial sweeteners. Milky deliciousness and packed full of goodness. Very clever. Strawberry Yazoo Kids supports change for life. Yazoo, shake it up! Contains naturally occurring sugars. Milk is a source of calcium, which is needed for the maintenance of normal bones.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
Did you know Currys PC World do business? Saving your business up to 30% with mega deals on computers and printers, electricals, large screen TVs, and even more. Top brands like HP, Microsoft, Epson, Sony. And if you find it cheaper from any major retailer, we'll match it. Get these deals before they're gone. Must end soon. Visit your nearest store or pcworldbusiness.co.uk/megadeals. T's and C's apply, excludes Inc. and third party.